Features of final income taxation. The features of final income taxation in the Philippines include a final tax, tax withholding at source, territorial imposition, and its application to certain passive income and individuals not engaged in business. The final withholding system requires the entity making income payments to withhold tax at source, resulting in the taxpayer receiving income net of tax and eliminating the need to file an income tax return. This system is strictly territorial, applying only to passive income sourced within the Philippines, and does not extend to non-residents or income earned abroad, which falls under the broader regular income tax obligations. Rationale of financial income taxation. The rationale behind final income taxation is primarily centered on convenience for both taxpayers and the government. This system absolves taxpayers of the need to file income tax returns, which is advantageous for those facing challenges related to distance and compliance costs. For the government, it serves as an effective method for collecting taxes on income where there is a heightened risk of non-compliance or tax evasion. To ensure the system's integrity, strict measures must be implemented to mitigate the risk of withholding agents failing to remit the taxes withheld. Under the National Internal Revenue Code, NIRC, final income tax applies to specific passive income and non-resident persons not engaged in business within the Philippines. Passive income is characterized by minimal taxpayer involvement and irregular occurrence, making it less likely to be monitored. Notably, non-resident persons, including non-resident aliens not engaged in business and non-resident foreign corporations, present a higher risk of non-compliance, as they lack fixed business locations in the Philippines. Consequently, the law mandates that Philippine residents making payments to such non-resident entities must withhold the final income tax applicable to them. Passive income subject to final tax. 1. Interest or yield from bank deposits or deposit substitutes. 2. Domestic dividends, in general 136. 3. Dividend income from a real estate investment trust. 4. Share in the net income of a business partnership, taxable associations, joint ventures, joint accounts, or co-ownership. 5. Royalties, in general. 6. Prizes exceeding P10,000. 7. Winnings. 8. Informer's tax reward. 9. Interest income on tax-free corporate covenant bonds. Final tax on individuals and corporations. Unless otherwise indicated, the final tax rates to be discussed in the following sections apply to all taxpayers, individuals and corporations, other than non-resident alien not engaged in trade or business, NRANETB, and non-resident foreign corporation, NRFC. Deposit substitutes. Savings and time deposits with cooperatives. Deposits in cooperatives are not subject to final tax. Final tax applies only to banks. Based on Dumaguete Cathedral Credit Cooperative versus Commissioner of Internal Revenue, GR 182722. Deposit substitutes. A deposit substitute is a way of borrowing from the public through debt instruments instead of bank deposits. Public means 20 or more lenders at one time. 19 lender rule. 19 or fewer lenders equals not a deposit substitute, private borrowing. 20 or more lenders equals deposit substitute, public borrowing. Interest on deposit substitutes is subject to final tax. Interest on private borrowing is subject to regular income tax. Exception. Government securities, treasury bonds, bills, notes, or automatically deposit substitutes, even if there are fewer than 20 lenders, if traded in the secondary market. Trust funds, investment management accounts. Subject to the same final tax rules. To qualify for long-term tax exemption, 5 years. 1. Held by the bank for at least 5 years. 2. Underlying investment must be a bank-issued deposit substitute. 3. The investment must also be held for at least 5 years. Pre-termination of long-term deposits. Individuals, if a long-term deposit or investment is withdrawn before 5 years, the previously tax-exempt interest becomes subject to final tax based on the holding period, less than 3 years to 20%, 3 to less than 4 years to 12%, 4 to less than 5 years to 5%, 5 years or more 0%, tax-exempt. Pre-termination, transfer of investment certificates. To apply the reduced pre-termination tax rates, the investment must still meet the original 5-year maturity requirement. Foreign currency deposits, FCDU, EFCDU, interest income from foreign currency deposits in foreign currency depository banks, tax rates. Taxpayer and tax rate, residents, citizens, resident aliens, domestic and resident foreign corporations, with 15% final tax. Non-residents, non-resident citizens, NRAs, NRFCs, is exempt. This includes NRA-NETBs and NRFCs, which are also exempt. There is no short-term or long-term classification for foreign currency deposits. Purpose: the lower tax rate and exemption aim to encourage foreign currency deposits to support international trade, since the Philippine peso is not globally accepted. Joint forex accounts. If a foreign currency deposit is jointly owned by, right-pointing arrow 1 resident and 1 non-resident, then, right-pointing arrow 50% of the interest is exempt. Right-pointing arrow 50% is subject to 15% final tax. Timing of withholding of final tax. The final withholding tax return, BEER Form 0619F, known as the monthly remittance return of final income taxes withheld, must be submitted in triplicate by every withholding agent or payer, whether an individual or a corporation, for the first 2 months of the quarter. Deadline and location for monthly manual filing. The return must be filed, and the tax remitted, on or before the 10th day of the month following the month in which withholding was effected, with a. The authorized agent bank of the Revenue District Office with jurisdiction over the withholding agent's place of business. b. In areas lacking authorized agent banks, the Revenue Collection Officer. c. The authorized city or municipal treasurer within the Revenue District where the withholding agent's business is situated. Monthly deadline for EFPS filing, asterisk. Per the schedule outlined in RR No. 26/2002, the deadlines for e-filing of returns are as follows. Group A. 15 days following the end of the month. Group B. 14 days following the end of the month. Group C. 13 days following the end of the month. Group D. 12 days following the end of the month. Group E. 11 days following the end of the month. Please refer to Chapter 4 for the specific groupings of taxpayers under EFPS. Quarterly filing, asterisk. The withholding agent is required to file BEER Form 1601FQ, the quarterly remittance return of final income taxes withheld, on or before the last day of the month following each quarter. Penalties for late filing or remittance of final income taxes withheld, asterisk. Penalties for late payment of income taxes, as detailed in Chapter 4, are applicable for non-withholding or non-remittance of final taxes. Entities exempt from final income tax, asterisk 1. Foreign governments and foreign government-owned and controlled corporations. 2. International missions or organizations with tax immunity. 3. General professional partnerships. 4. Qualified employee trust funds. 5. Personal equity retirement account funds. The first 2 categories are exempt based on international comity. General professional partnerships and qualified employee trust funds are explicitly exempt from any income tax imposed under the NIRC. These entities are exempt not only from final tax but also from capital gains tax and regular income tax. Pre-termination of long-term deposits or investment of individuals. If the deposit or investment placement of individual taxpayers is pre-terminated before 5 years, any previously untaxed or exempted interest income will be subject to final tax upon pre-termination based on the holding period. 20% if held for less than 3 years, 12% if held for 3 years to less than 4 years, 5% if held for 4 years to less than 5 years, and 0% if held for 5 years or more. Thank you for the attention.